Bill Mears here with McGuire, Mears and Associates. Coldwell Banker Commercial published a white paper, National Real Estate Outlook 2021, What Will Drive the Recovery of CRE Markets in 2021. We'll summarize that report and offer some of our observations about our market, Rock County, portion of Walworth County, Roscoe, Rockton, South Beloit, Illinois. But first, let's take a look back. The pandemic expedited the declining demand for retail brick and mortar and increased online shopping that was already growing fast. Supposedly it accelerated by about 4 years. Winners and losers, hospitality, restaurants, and bars. That's certainly not news to anyone. I would note that talked with a hotel operator recently. Their occupancy rate is up to about 60%. Certainly good news, way better than it has been the last 6 months or so. So that could be recovering now. What winners were logistics, getting product to and from the market, and quick service restaurants that were able to adapt to curbside pickup, and of course they had the drive-throughs to support them as well. Net leased office space surprisingly held its own. I think it certainly did in our market. We do not have the great big office complexes that you see in the urban areas. So, but apparently they hung in there as well. But we certainly held our own. McGuire, Mears and Associates did over $20 million in commercial real estate transactions in 2020. So it was a positive year in terms of overall commercial real estate. 2020 outlook is going to be led by industrial, grocery, retail, multiple family, land, single tenant at least, and drive-through properties. I think exciting news is that they expect tertiary markets will grow because people have a preference now a little bit more about where they want to live and where they want to work. Vacant malls will be repurposed for non-traditional tenants. We don't have a vacant mall, but we do have a regional mall with vacancies, and certainly we may see some obsolete retail space being transitioned to non-traditional. We think there's going to be a recovering economy, and that paired with low interest rates should help sustain the private investor market and may push commercial real estate assets prices higher in 2021. We're seeing that certainly in industrial lease rates that have been increasing. So that's a good segue into the getting into talking about each individual sector. The first one that we expect that will be in the lead is industrial. Interesting that they comment in the report that tertiary markets are going to be challenged by lack of suitable product, buildings. And we already have seen in the paper a couple of times, Beloit, Hendricks commercial properties, they're going to be building 2 spec buildings in the Gateway, and there are 3 spec buildings going up in Janesville. That will total over 1 million square feet. So we're going to be well positioned to take advantage of the recovering economy, and this tertiary market is not going to be challenged. Also, I would like to mention Class and Quality Chocolate with their 150-acre purchase in Milton and the about a 250,000 square foot initial project breaking ground this spring. The next one is retail, and certainly some real concern for retail markets and bar restaurants in our markets. Most of our communities, cities have made significant strides in downtown development in the last decade. Large and medium boxes have been backfilled with some major exceptions that may well provide for the non-traditional uses mentioned above. Retail sales have remained strong as measured by sales tax. Third and fourth quarters in Rock County set a record totaling close to $9 billion plus in revenues. The headwinds that we see for retail are zoning ordinances that are long overdue for an update. They're out of step with fast-changing retail and even the office landscape. We think that retail reinvention will be seen with distribution centers, micro warehouses for last mile delivery, a thing called ghost kitchens where restaurants and catering services just use the kitchen and ship food out by quick delivery. Multiple family, which we've talked about, that some of the vacant boxes could very well be transformed into multiple family. Medical offices, schools, and churches. Headwind here, as well as zoning, is also the overall cost of adaptive reuse. I think it was largely touted, but I think what we're finding in reality is that in some cases it's just too darn expensive. Multiple housing is certainly going to lead the way, as we know, in the recovery. We mentioned earlier. In 2020, Janesville saw its first new apartment complex completed in a decade. That was the first olive out of the jar. Two more are finishing up this year. The three projects in Janesville deliver about 500 new units in a market that has less than 2% vacancy rate. Most importantly, I think that 92 units are targeted for workforce housing. If we're going to provide labor, we're going to have to have a place for folks to live, and I think that's an important aspect. There's momentum for multiple family housing in our communities. How do we maintain it? Rental income is hard pressed to keep up with the cost per unit. Tax increment financing has played a big role in the development of the multiple family housing in Janesville, and it needs to stay in effect if we're going to maintain this momentum. I know Beloit, the city of Beloit, is also looking at tax increment financing. There's some language in the law that may allow for them to use tax increment financing in the future. I've included single-family development. It wasn't mentioned in the Coldwell Banker Commercial report, and we don't normally think of it as commercial real estate, but I think housing is going to be the economic development challenge for the next decade. People need a place to live. If they are going to choose to live in secondary and tertiary markets, which we hope they do, they've got to have a place to live. Right now, there is almost no housing to be found in the moderate to inexpensive range in our markets, and we're challenged to get that done because of the cost of infrastructure to the developers and the single-family housing contractors. Cities and communities are going to have to find a way to help them with infrastructure. The cost of that is very high, as well as the cost of building materials. The office outlook, stay-at-home orders certainly impacted the office sector. Vacancy is low in our market compared to just a few years ago. Downsizing may contribute to that as well. One thing to keep an eye on is the office space that exists in some of our larger employers in the industrial and medical sector. We traditionally think of industrial buildings with a lot of thought to the office, without a lot of thought to the office space within. How many of those office jobs will return once we have all been vaccinated? Lots of empty parking lots in front of the office. Our view, watch for growth in the medical sector, with one large project considering Janesville. Also, the potential for more small outpatient clinics. The CBC National Outlook for 2021 didn't have a section on technology, perhaps because it overlays so much of the other sectors we've been exploring. I was bemused to see an article in Inc. magazine about how not all tech is gravitating to Nashville and Austin, naming Madison, Wisconsin as a major magnet. Well, perhaps. As I prepared my remarks for today, it was in the teens, but it did get my wheels turning regarding our local economy. While North Star and Shine deservedly commands most of the attention in regards to high tech, there is new technology germinating out of Iron Tech and the Janesville Innovation Center, like American Extractions, which recently was profiled in the Milwaukee Business Journal. And certainly our local manufacturing companies are on the cutting edge of new technologies for manufacturing and packaging. We think that the Innovation Center and Iron Tech will continue to nurture new technology companies that will need to find new homes and jobs, labor, for their growing businesses. Well, now it's time to look at a crystal ball. The sudden shift to work from home created new expectations about flexibility. People are making new choices about where they want to live and where they want to work. And the massive deployment of remote work tech platforms certainly has accelerated that push. How will we take advantage of the transition? We're bullish about 2021. Pent-up demand will impact retail sales. Government assistance will save some small businesses, and we're strategically positioned for logistics with access to I-90 and I-43. We think headwinds will be housing and labor.